Happy Sunday. Let's see how quickly we can wrap up today's Sunday stock talk. What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having an amazing Sunday. Today it is October 26th, 7 p.m. Arizona time. So I do apologize for, normally we host it right around 6:30 to 7 p.m. So yeah, right in time, a little bit on the later side. But nonetheless, excited here to prep for the overall trading week. We have a pretty interesting week ahead. Let me go ahead and just start sharing my screen so you guys can see exactly what it is that we are looking at. We have big tech reporting earnings this week. Let me go ahead and pull this up for you guys super quick. For those that did not tune on into today's earlier video, let me see. Yeah, here we go. We have big tech reporting earnings this week from Meta, Microsoft, Alphabet. Then we have, that's on Wednesday after the market closes. And then Amazon, Apple are the big two. And then Coinbase, my favorite, MicroStrategy, are going to be reporting earnings after the market closes on Thursday. And for those that don't know, I'm totally joking about MicroStrategy. It's not my favorite. It's my favorite stock to short. It's honestly not even my favorite stock to short either. It's just I like talking crap on it because I don't like the company. With that being said, we also have an interesting week ahead. We have the Fed FOMC rate decision. For those that do not know, right when the market closes, normally, this is 2 p.m., 1400. I got a little confused. 1400, I thought it was like 4 p.m. Eastern time. I was like, wait, isn't it normally 2 hours before the market closes? So yeah, 2 hours before the market closes or 1400 Eastern time, the FOMC rate decision will be released. Right now, there's obviously high expectation according to the Fed rate monitor tool, 2 days, 16 hours, and 7 minutes that the Federal Reserve is going to cut interest rates by a quarter basis point. Remember, if you want the markets to go up, you want the Federal Reserve to start cutting rates more aggressively. If you want the markets to go down, you want them to pause or potentially start raising interest rates. Anything that supports, any data, any economic report that comes out that supports that, hey, inflation might be getting too high, or hey, this might want to encourage the Federal Reserve to be more conservative and not cut interest rates as aggressively as they might, as the market might want them to, that is what could cause markets to drop. But anything that would encourage, no, inflation is not rising as quickly as what was expected based off of the last CPI reports. Inflation is rising, just not as quick as was expected. So therefore, that's why we saw the market rally on Friday, therefore supporting the case that the Federal Reserve is likely to cut interest rates on the next FOMC rate decision. And this is going to be Wednesday. So does it mean that the Federal Reserve has to cut interest rates? No, of course not. They, at the end of the day, vote and decide within one another if they're going to be cutting, but definitely something to be paying attention to. This report will impact markets. So a very, very influential week. Even if you're a complete beginner, this is a great time to be paying attention to the markets, to be watching the market. You don't have to trade. There's a lot of great traders and great investors that during moments like this, during major economic reports, such as the FOMC rate decision or major earning reports, they don't like to trade because of the volatility that might present itself because of it. So again, don't be encouraged to do something you don't feel comfortable doing. There's absolutely nothing wrong with watching. So because of the news that was released about a potential trade deal being agreed upon between China and the US, most of the market is in the green. You guys could quickly see here, NASDAQ's QQQ saw a really nice push up. It's up about 0.85% in the green, as again, many expected, pushing markets to all-time highs. We'll see where they open and how the markets react once they are actually open. And everything, Bitcoin is in the green. Bitcoin is up 3.6%. It went from lows of 113,000 to highs of 115,000 in a very short period of time. All the meme stocks, Oklo up 4.95%, HIMS is up 2.2%, Irene is up 6.49%, PLTR is up 1.72%. All of them are quickly gapping up. But guess what? Guess what isn't gapping up? I have to talk about it. Look at this. Look at this. At $1.78, we got our artificial meat writers still bag holding this absolute worthless company. Beyond Meat. Beyond Meat was a notorious stock last week that pumped from 50 cents to highs of $8.85. When I made numerous videos, I even made numerous videos talking about it's not even safe to short because it's just a momentum-based stock that's a pump and eventually it will dump, but no one knows when that dump was going to happen. Once price action supported the short, then obviously my LPP team and myself shorted the shit out of that stock. Nonetheless, there's a lot of people that got offended. A lot of people that were saying, well, you just don't understand the importance of this company. You don't understand that it's turning things around. It's realigning its partnership with Walmart. Once a bullshit company, always a bullshit company. Again, do not excuse your inability to manage and mitigate your position size. Your hopes, your desires are not mine and they're not other people's. If you cannot control your emotions, then don't talk to me about what I should do with my money, right? From highs of $8.85, this stock is down 80%. No one should be surprised. It's an absolute worthless company with terrible revenue, declining quarter after quarter, burning through cash. They had to borrow $100 million through creative financing just a few months ago just to stay afloat because this company loses $150 million every single year. Imagine that. Imagine trying to find an alternative of real meat just to lose $150 million every single year. I don't know. Couldn't be me. Nonetheless, again, for a period of time, this was a very trendy stock, right? Pumped up to highs of 238. How many of you guys remember that back in 2019? I know I do. We saw a strong retracement, pumped once again during irrational markets, support irrational valuations. This was the post-pandemic rally, pumped up to highs of nearly 200, and then we came crashing down. So this isn't even one of the top 5 stocks that I want to talk about today. It's just the stock I wanted to talk shit on. So yeah, sorry. I got a little carried away. Let's go ahead and jump right into it. Whatever stock you want me to break down, let me know in the live chat. Make sure you drop a thumbs up and then share whatever top stock you want me to break down in this live stream in that live chat, and I'd be more than happy to break it down for you. All right, we got well played SoFi. Okay. I feel like we've broken down SoFi. SoFi has been notoriously bullish recently, right? Yeah. So what are your thoughts on SoFi? Are you trying to go long, trying to go short? Obviously, I mean, I'm sure you're gonna see that. I'm not gonna say it's a good deal, but you're at least doing something. You know, if the trade is based off of direction being in your favor, then yeah. You know, it's pushing up. It's going back to retest previous highs. It's incredibly bullish. Direction is in your favor. And if that is your trade criteria, I respect it. I can see why it might make sense for you as a trade. It looks like it has up and coming earnings. Is that correct? The 28th. So that's Tuesday. Let me double check. Tuesday before the market opens. Okay. So let me see if I see. I've been holding for 3 months, up 50K. Love that for you. Again, looks like direction is extremely favorable. Again, I'm not here to tell you what you should do with your investment. And right now, it looks like everything is pushing the markets higher for longer. I mean, you're up 50K. I'm obviously have a specific style of trading and investing. If I was up a substantial amount, I mean, if you've been holding for 3 months, this thing has been going pretty crazy. You have to be up about like 50%, I'm assuming, right? So you probably went in with 100K. It's up to you. Do you want to reduce your position size? Do you want to add more, thinking that it's going to skyrocket? I can pull it up here very quickly when it comes down to its actual, previous earnings. So if you click on the pro research, it's one of my favorite things. Yeah, I mean, its quarterly revenue has been very impressive. I do have to say so myself, right? Higher highs, higher lows. This is what a company that is growing should look like. Do you see this? It's like AT&T raising the bars. It's a joke, but not really. Do you guys get what I mean, right? It's like, okay, obviously it's had an incredible rally recently. Could it be overvalued based off of, recent catalysts? Possibly, right? I'm sure that we can all kind of have that conversation. But it's really important that, okay, well, it's also on top of that performing exceptionally well. So there's obviously great downside if direction turns against this, right? There's 38% downside according to Investing Pro's fair market value. So it just depends on how conservative or how aggressive you want to play it. If I was leveraged on the position, I personally would remove any borrowed cash or capital that's being leveraged and just focus more on cash. Because if the markets do dip, then maybe you can load up on it if it meets your criteria. But if it ends up pushing to new highs, you still get to take part of it because you didn't fully sell your entire position. It just comes down to however you choose to play it. There's people that are very conservative. There's people that are very aggressive. I don't want to say there's a right or a wrong way. It's however you want to lead your investments. And that's what it sounds like it is to you. You've been holding it for 3 months. It's been doing exceptionally well. Now you have to weigh out your pros and your cons. If you do hold, what's your potential for profit? And if you do hold, what's your potential for loss? So then at that point, you can begin to entertain, do I want to add more? Do I want to reduce? Or do I want to stay the same? So I wish you nothing but the best. I'm pretty sure you're part of our LPP team. Am I correct? Your username sounds very familiar. I feel like I spoke to you today. Ricky, what do you think about Netflix? Yeah. Okay, sweet. I've been paying attention to it. Netflix has had a recent pullback based off of their earnings, right? It's been incredibly bullish, higher highs, higher lows. And this is the part that I'm kind of like, let me pull it up here very quickly. Okay. Let me pull up their pro research, their revenue. I mean, it has to be their guidance. Their guidance has to be a little bit off, or their net margins and their competition. It's an emerging, it's a very competitive space. Netflix is growing, right, in an exceptional way. So if you like their growth story, could this be a potential dip buy opportunity? My only concern is that I still believe overall markets are incredibly overbought. So there's definitely more downturn possible if sentiment begins to change, but we are far from that. Markets are literally at all-time highs as we speak during the overnight hours. So again, if you want to entertain that and you think that this could be a lucrative dip buy opportunity, I'm not here to convince you otherwise. I would say that makes more sense than to be shorting a stock that, that is truly against the overall trend and overall market sentiment as of right now. So I think it makes more sense to go long on this than it does to go short, not just on the technicals, but also on a quick look on the fundamentals. So I would weigh out your options on what you think, when it comes down to this specific trade. What's your intention? Do you plan to trade it? Do you plan to invest in it? If you're trying to make money right now, obviously this stock was a stock that was selling off, and if that downtrend still continues, then that direction is not going to be favorable to make money right now if you're trying to go long. But just like it has before, when it sells off, it begins to show signs of a support and then a reversal, support and then a reversal. So if you know how to trade like the 3 stages of reversal, like we talk about in the LPP lesson library, then that's definitely a setup that, might be worth your while if it meets your criteria. So I appreciate you taking time and tuning on into our little Sunday stock talk. So yeah, thanks. Easy win for Madrid today. Mbappe's the go. Hey, I like that your what's it called? Your cover picture and your username is all about that. At least we know that you're not just a convenient fan, right? Coinbase, yeah, let's do that. So that's ticker symbol coin. What do you think I'm going to say about Coinbase? I think Coinbase has been incredibly volatile lately, and that's for a specific reason. I think it's beginning to kind of lose its edge. It has really strong rallies, but then its retracements have been very strong as well. It has very strong rallies, but its retracements follow very well. It has earnings after the market closes on Thursday. It's definitely a stock that I'm going to be paying attention to. If I'm not mistaken, the last time there was some concern with Coin, and that's especially, again, Coin does exceptionally well during bullish markets. But as soon as market sentiments begin to change, it's a very different story, right? We could see the downturns. We could see the upticks. They've done a pretty good job. It almost looks like we've been plateauing. So it's going to be interesting to see in this up and coming earnings report to see if they exceed or come below market's expectation. So wait, let me look at this real quick. 32 times their earnings. That's actually not terrible. It's a company with $2.8 billion in net income, trading at a low P ratio. That's actually true. Yeah. Net income is expected to drop this year. Stock price movement squat. Dang, that's all kind of the things that we highlighted already. Trading at near high earnings multiple. Yeah. It's just the same previous resistance range continues to present itself. So based off of the recent sell-off that it had, it's showing a lot of possibility of, retracement. So with something like this, it's a coin flip. Big picture, do I think you're getting an incredible deal on coin? Of course not, right? It's incredibly overbought based off of recent patterns. But if you believe that its revenue is going to continue to grow, then I say, put your money where your mouth is and see how it plays out for you. But if you are someone that, hey, it might be a short-term rally, but eventually it will come down, there's a big difference between a trade and an investment. So I would say it makes sense on why you're watching it, especially the week before, the week of its earnings. See if we could run up closer to $400 per share. But just based off of previous retracements that we've seen at least 3 times, it is no stranger to pullbacks. So that is why I wouldn't be surprised. Just my 2 cents. This is the 3rd stock we've broken down. Again, I'm going to break down 2 more stocks for you guys. All I ask you to do is you just have to be subscribed to the channel to partake in that live chat. Okay. All right. I like that. IBM. I like the little comment you made about them. Okay. IBM hit highs of, what is that? You think it's a good buy here? It just had a recent rocket all the way up to 316. Did it just report earnings? Yeah. You think it's a good buy here? Oh. No, I'm pretty sure. Wait, are you the same person? I'm looking for it. 1 sec. I lost your previous comment. My bad. I sold IBM. Okay. And this is just me. I do agree with you. Yeah, obviously direction is in IBM's favor. It's incredibly bullish. I can see why you would be going long, or if you recently sold. I don't know. I got confused on who asked the question. My apologies. But no, I don't view it to be a good deal here. Obviously, markets are irrational and they're up for, a very big earnings week and big economic reports. So could it push higher? Of course, anything can always happen. Do I think it's worth the risk? No, I wouldn't say so. Not for me. But if you like it, if you like the risk to reward, again, I am no one to convince you otherwise. PE ratio is not terrible. It's not incredibly high. It's at its higher point, 49, almost 50. This company prints money. $64 billion in annual revenue, $5.8 billion in net income. Not bad. What's its market cap? Market cap is 287 billion. Isn't that crazy? This company produces its net income. Let me look at this real quick. Its net income it's been what it's been. I think that's the part. Its net income of what the company actually takes home, right? What the company actually makes. It's been pretty steady at $5 billion, $5 to $6 billion, right? Tesla is below that, especially with it losing its EV credits. I know a lot of Tesla investors are not going to want to hear this, but have you guys ever taken that into consideration when you compare a trendy company to a not so trendy company. Like IBM is not a sexy company, right? It's not. It's like, what's the other, like, well, let me give my example. I'm just giving it as an example. I'm not here to convince you. If you're, I love Tesla. I own 2 Teslas myself. I love Elon. There's just, for me, I can appreciate someone, but also clearly see that this company, this business, because that's what it is not doing so hot. Like Tesla is not doing so hot. It's trading at a $1.45 trillion market cap, but it makes $5 billion with its EV subsidies. So once it loses that, it loses about 30% of that. So it's going to be at like 3 to 4 billion of net income. Yet now you have IBM that makes 5.8 and they trade at a $287 billion market cap. What is that? Like 1/6, 1/7 of what Tesla trades at? Do you guys ever take that into consideration? There's another one, UNH. I know a lot of you guys are not going to like UNH, but dude, have you guys looked at UNH? Talk about a company that prints money. Dude, look at this, $422 billion in revenue, $22 billion in net income. This is a money-making machine, which is why, again, it was like so easy for me to be like, okay, this thing dipped like 50%. It's traditionally speaking, not a sexy business, but traditionally speaking, a very attractive business because it makes a lot of money. Like this money prints. Again, $22 billion is what it earns in net income. $422 billion. This company makes in revenue a year what your inflated AI company thinks it's valued at. And yet it's pre-revenue. Don't get me started talking about fucking Oklo losing $56 million. Yet it's a company that Oklo doesn't trade at that high of a valuation. It's $20 billion. I just like talking crap. You guys know I do. But healthcare is always big money. Not always. I would say UNH, the way that it does business. Again, I'm not saying that I agree with how it conducts its business. All I'm saying is that it knows how to print money, right? So where was I with this? What was I saying? Yeah, IBM. I was giving the example about Tesla. No, I don't think it's a good deal though. I think it's not a super sexy company. I think it's great that it saw a recent push. I just think that in comparison to the other companies out there, they attract a lot more attention. And it's great that it experienced the recent positive catalyst. I'm not saying that it doesn't make sense to go long on it. I'm just saying that it's not a good enough deal where I would care to take advantage of it. That's all I'm saying. So do MSTR, please. That would be a banger way to end the live stream. MSTR. Can we? Can we end it with MSTR? The ultimate money glitch. Where are my MSTR investors? Let me see a show of hands. Let me see a show of hands. Where are my MSTR investors? The ultimate money glitch. Ricky, you don't understand the matrix. If you're new to my channel, no, I do not believe in MSTR. I think it's a worthless business. The only reason that is actually in any way profitable, if you look at, the reason it's like, a net income of 4.79 billion. What happened, right? It used to lose money. It's its Bitcoin holdings. The company itself. Look at this. Yep. The company is driven by its Bitcoin holding. That's all. The actual business itself loses about $500 million every single year. So as soon as Bitcoin begins to decline, then so will MicroStrategy. That's as simple as I can put it. Look at this. Look at its quarterly EPS revisions. Look at that. Quarter after quarter. And then all of a sudden, boom, it's going to be hilarious. Hilarious. Look how much money that they spend. Look at that. Woo. Operating profit. Yep, there we go. Because they burn through how much? Look at that. 138 million, 278, 107, and then net income tax bringing their total to 4.8. Their first profitable quarter, all thanks to the BitConnect. You guys remember that? I'm excited for it. Look at this. Holy smokes. Oh man, it's going to be fun. It's going to be fun once it happens. But for now, what do I think about MicroStrategy? I love talking crap on it. No, I don't agree with the business. I think it's an absolute gimmick. I think that I don't even believe in Bitcoin, but if you believe in Bitcoin as an asset, very simple. I've been straight up with you guys from the beginning. If you believe in an asset, then invest in the asset itself. Why would you ever buy a stock that calls itself a Bitcoin treasury that simply dilutes you and you are buying it at a premium? Because if you actually do the math, and please do it if you ever want to challenge this, if you take into consideration what MSTR is trading at versus what it carries in Bitcoin, it trades at a multiple of what it carries in Bitcoin. Why would it ever trade at that? Imagine a company holds $100 million in gold, but to buy the company, you have to pay $130 million. It doesn't make sense. Why would you ever be paying a premium to own a company that owns an asset? Just buy the asset itself. Cut out the middleman. And that's the biggest thing, is that I've always said it from the beginning. I don't believe in Bitcoin. I think it's inherently risky. I think it's incredibly volatile. I think one moment, yeah, it's up 100%. Another moment, it's down 80%. There's a reason it does not work, and there's a reason a lot of people don't trust it. Nonetheless, if you do, great. Buy the actual asset itself. Why would you ever invest in a company that dilutes you, borrows against your shares at 0% interest, and never needs to pay you back? Because again, they can borrow for an infinite amount of time. It's just insane to me. So when MSTR reports earnings, the company barely even moves because everyone that holds MSTR knows that it has nothing to do with how the company actually does business or conducts business on a quarterly basis. It's just everyone knows that's holding it. They just hope that Bitcoin price continues to go up. The really sad thing about this is that Bitcoin is at $115,000 per coin. Bitcoin has made new all-time highs multiple times in 2025, yet MSTR has not made new all-time highs since 2024 because its hype is fading. It's nearly at 52-week lows. So again, just my 2 cents. You let me know what it is that you think. All right. So I made a lot of money on MSTR after buying the dip. There's a lot of money that can be made buying shitty companies. I think Beyond Meat is a great example of it, right? It's knowing how to trade it, respecting oversold and overbought levels. Like even I've said this with my LPP team. They've asked me, why have I not been shorting MSTR as often? I think it's very safe to say that as long as Bitcoin holds above 110,000, MSTR has done a really good job of having a support right around $300 per share. And based off of recent patterns, 300 is more of a support range and 400 is more of a resistance range. So I would consider shorting MSTR at 400 or 440 because risk to reward, there's more downside that, in my opinion, than there is upside. But at 300, I also have to make sure that I treat it as what it is, and that's a trade opportunity. And here, there's more upside than there is potential downside as long as Bitcoin holds above 110. It's knowing when to trade something. So I do agree with you. There's money to be made with anything and everything in the market. It's just simply respecting overbought and oversold levels. I don't have to, just like with Tesla, I like the company and I like the business and I like the person behind the business, but I don't have to justify or ignore the blatant obvious of, hey, it's overvalued. I'm not going to buy it at $450 per share when I know its business is not doing that well, right? It's like seeing through the BS. Make sense? I'm up 300% on MSTZ. What is that? Is that the leverage? That's the inverse. Yeah, be careful with those though, regardless. Any inverse, I know are you making money shorting or yeah. It's like the double leverage short ET. Sure. I still think that those are incredibly risky. I think people think that like, oh, Ricky wants the markets to drop, so he's all in support of shorting. No. I think there's a time and a place for everything. There's many times like with HIMS last week, I've kind of been stepping away from shorting it because it recently became oversold after a recent retracement. It's, I'm definitely here for the same reason as you guys are. We're all here to make money. But it's also important that just because I don't like a stock and I want it to, crash and burn, doesn't mean that I should let my emotions get the best of me. At the end of the day, it's all calculated risk and opportunity. And as HIMS approaches a support where its recovery now outweighs its, downside, it probably isn't, smart to continue to short it. So same thing with Beyond Meat. I gave you guys that example. We had a great time shorting it from highs of $8. Now that it's at $1.70, it's too risky for me, right? It could pop up for no reason. And yeah, maybe it could continue to sell off. I'm not here to find out. I know that it's incredibly risky. I made my money. I'm bouncing. I'm moving on. So I'm always happy to share my opinion, not because I think I'm right in everything it is that I, share. My LPP team knows that, they get to watch me trade live every morning. I make mistakes over and over again, but I think that's one thing that they really like about our live sessions is that they get to see all of my good trades and all of my bad trades as I always do my part in holding myself accountable. So again, thank you guys again for tuning on in to our Sunday Stock Talk. I hope to see you for tomorrow's live trading session. Whenever you feel like you are ready, we're offering you guys that 24-hour discount. It's the second link in the description down below. It's going to be $300 off. It's one of our biggest discounts that we offer for LPP 3.0. It's a one-time payment, lifetime access. If you don't feel like you're ready, don't worry. Just subscribe to the channel and I'll do my part in keeping you guys up to date with all the earning reports and economic reports. But other than that, if you do feel like you're ready to join and you've been waiting for a discount, second link down below. I'll see you tomorrow at Market Open for our live session. Like always, let's make sure that we end the year on a green note. And also for those that are asking for the software that I was using to look at the pro research, it's Investing Pro. It's the first link in the description down below if you want to check it out. Take care, team.